Fed fund futures, when crude oil has been rising, coming out of all of the geopolitical events that are going on in the world, as the Fed fund futures have pushed the rate cut from June to July to September to October, now it's in December. As crude oil has continued to grind higher, the Fed fund futures are being pushed out further. And as the Fed fund futures get pushed out further, the indices decline. And so, what price does the Fed fund futures stop declining from the perspective of market participants perceiving that there's enough pain that the Federal Reserve will cut interest rates, go back to cutting them sooner? And I'd like to answer that question by looking at this from the perspective of the Fed Pivot. Now, the Fed Pivot webinar, which is on this site, is a framework of studying the last now 15 Fed pivots from hiking rates to pausing to cutting rates. And if you study back into the 1940s, the typical rally that you have after the Federal Reserve starts cutting interest rates is an 11.07% rally. The average of those last 15 pivots from hiking to cutting after the 11.07% rally, there is on average a 22.2% decline. And the last one was amazing. This was February of 2025. We had September 18th, the rate cut, and we rallied 10%. It wasn't 11.07. Remember, it's an average. And then we declined 20% coming out of these failed breakouts at highs. Now, we've been speculating about this Fed pivot. It was a year later. Powell went to pivot again, and that was coming out of September. And we started ripping away from our extension long levels. Now, we didn't rally the 11.07%. If we were estimating, it's probably 7. But we broke through the traditional longs. And this is what invalidates all of the support below us. It really does. Breaking this long, and this was last week when we broke this 61.8% line. We had the very first measured move short after the trend break. Last week, Thursday going into Friday, and then we completed targets. We had nowhere left to go on Monday. We were completing all of our targets. We were in a no man's land. And then what we were anticipating is a squeeze right back up into resistance. And now we've confirmed our next downside target. We've broken the longs from lows. We've confirmed our targets at the 64.76. So what is the 22.2% decline from the 7,043? What is that 22.2% decline? Well, if we take the 7,000, take the 7,043 times 20%, that's 1408. 1408. So we're taking the 7,043 highs minus the 1408, 5635. I believe we came up with 5,500. Very close. 5,500. And when we're thinking about that, let's just mark. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.